Hello everybody, my name is Jett, and today we're going to be showing you how to trade crude oil futures on Robinhood. Now before we get into this video, please remember to smack that like button, subscribe if you're new, and share with your friends. With that, let's get into the video. Now before we get into this video, we have to understand what an ETF is. An ETF is a type of security that is a collection of other securities such as stocks or futures. Now most of these ETFs are charged a management fee, or they have an expense ratio to having and owning an ETF. Now, ETFs usually work where if you have a 10% gain throughout the year, there might be an expense ratio of 1%. So that means by the end of the year, they will take 1% of your return, so you actually only received 9% of the return. These are usually associated to actively managed ETFs, where they buy and sell or trade what is actually involved inside of the ETF. Now, Robinhood doesn't actually have a trading platform for futures, but with these ETFs, they act like a stock, so you can buy and sell them on the stock market. This is how we can buy and sell crude oil futures on Robinhood. Now, with that being said, I'm going to give you my top 8 oil future ETFs that you can be investing in right now. Now, these are in no particular order, but this is a way for you to get some exposure to some ETFs that have future contracts. First, let's look at USO. USO is the United States Oil Fund. USO holds predominantly short-term NYMEX future contracts on WTI crude oil. Now, since this pandemic that's been happening, it's about 82% down year to date. 52-week high was $106 and 52-week low was $16. This fund came out in 2006 and has an expense ratio of 0.73%. So as that example I gave earlier, if you have a 10% return this year, they will subtract 0.73% and you'll receive about a 9.2% return. Next, let's look at USL. USL is the United States 12-month oil fund. USL tracks light, sweet crude oil spot pricing using an average of the 12 nearest months of the NYMEX WTI crude oil future contracts. Now, year to date, they're about 53% down. They've had a 52-week high of 23.85 and a 52-week low of 9.50. This fund came out in 2007 and has an expense ratio of 0.82%. So again, 10% return minus 0.82%, you have about a 9.18% gain or a return on your investment. Now, the third ETF that we're going to be going over today is UUCO. UUCO is ProShares Ultra Bloomberg Crude Oil. Now, this is a leveraged fund. That means it's times 2 of the effect that it's actually having on the futures contracts. So they provide 2 times the daily return of the index of futures of WTI crude oil. Now, they're about 97% down year to date. 52-week high was $607 and their 52-week low was $1463 as of today. Now, this came out in 2008 and has a 0.95% expense ratio. So again, 10% return in a year minus 0.95, you're looking at about a 9.05% return. Now, the fourth ETF that we'll be covering here today is OILK, which is ProShares K1 Free Crude Oil Strategic Fund. Now, this fund is an actively managed fund of WTI crude oil futures with up to a 3-month expiration date. Year to date, they're about 77% down, which with a 52-week high of $116 and a 52-week low of $22. This fund was created in 2016 and has an expense ratio of 0.65. So we take our 10% return minus 0.65, you're looking at about 9.35% return on your investment. Now, the thing that's cool about this ETF is that they actually pay dividends of about 1% a year. Now, the fifth ETF that we're going to be looking at today is the OLEM. Now, this is an IPATH Pure Beta Crude Oil ETF. This is a UK-based bank which provides other services such as savings accounts, checkings accounts, etc. for people in the United Kingdom. But they also offer this ETF. Now, in this ETF, they're about 56% down year to date. They had a 52-week high of $19.75 and a 52-week low of $7.17. This ETF was created in 2011 and has an expense ratio of 0.75%. So we take again 10% return in the year minus 0.75. You're looking at about 9.25% return on your investment. Now the sixth ETF that we'll be talking about today is DBO. DBO is Invesco DB Oil Fund. This fund tracks an index of crude oil future contracts. It optimizes these contracts by selecting based on the shape of the futures curve to minimize contango. Now, this fund is about 48% down year to date. It has a 52-week high of $11 and a 52-week low of about $5. This fund was created in 2007 and has an expense ratio of about 0.75%. So we take our 10% annual return, subtract out the 0.75, and you're looking at about 9.25% of your return on your investment. Now, the thing that is cool about this ETF as well is that they pay an annual dividend, and it has an annual dividend yield of about 3.31%. Now, the first 6 ETFs that we just covered are long ETFs. That means if the price of oil goes up and the price of these futures go up, that means you will make a bigger return on your investment. Now, the next 2 ETFs that we will be going over today are short ETFs. That means if the oil prices go down, you will have a higher return on your investment. Buying short means you're betting against the current price, thinking it will go lower in the future. Now, this 7th ETF that we're going to be going over today is SCO. This is ProShares Ultra Short Bloomberg Crude Oil. Now, this is another leveraged ETF, so that means it will reflect twice as much as the current effect on oil futures. So this is a 2 times the daily return of the index that measures the performance of crude oil as reflected through future contracts on light sweet crude oil. Now, year to date, they're up 283%. Since we've had such a crash in crude oil prices, the 52-week high has been $67, and the 52-week low was $11. This ETF was created in 2008 and has an expense ratio of 0.95%. So that means if we have a 10% return, they will take 0.95%, and then you'll receive 9.5% of your investment. Now, the 8th and final ETF that we're going to be talking about today is DTAO. DTAO is DT Crude Oil Double Short ETF. Again, this is a leveraged ETF, so that means it will reflect double as much as it would affect normally an ETF on the futures contracts. So DTAO has had a year-to-date return, again, since this is short, of 370%. So their 52-week high was $372.95, and their 52-week low was $42. This ETF was created in 2008 and has an expense ratio of 0.75%. 10% minus 0.75, you're looking at a return on your investment of 9.25% a year. Now remember, before you actually purchase one of these ETFs, actually do some research into them. I have the volume, I believe, inside each one of the pictures that I put inside the video, but you'll actually be able to see what type of crude oil futures they're actually invested in and when they change future contracts, if you look up some of these companies in their ETFs. Just to clarify, I'm not recommending you should buy or shouldn't buy one of these ETFs, but I just want to get this information out there because I've been asked a lot, how can I get involved with ETFs? How can I be getting involved with crude oil due to all the commotion that's been happening related to crude oil? I hope this video helped you out. I had no idea that you could trade oil futures on Robinhood, and with these ETFs, it gives us the ability to profit on what has been happening with the oil industry. Now, please Don't forget to smash that like button, subscribe if you're new, and leave a comment if you'd like me to cover something that you'd like to know more about. Please share with your friends, and with that, have a great day.